Hello and welcome to Profiles in Risk. This is your sleep-deprived host, Tony Cañas. And today I have with me Frank Giaoui. And he's told me like 3 times how to say his last name, and I think I just butchered it. Frank is founder at Optimalex. Frank, how's it going today?
Great. Thank you for having me, Tony. And by the way, you pronounced it perfectly well.
Fantastic. Thank you. And actually, I want to close my work email because otherwise it will be interrupted 10,000 times. Awesome. So you are normally New York based, right? But you're currently traveling in Europe. So south of France, I have been to France, but only to Paris. I've heard that the south is gorgeous. So how is your trip going?
Well, my trip is going well. I am French, and my accent cannot hide it, of course.
Mm-hmm.
But I'm based in New York. Have been living in New York since 2015. But from Mediterranean ascent. You know, I was born in Tunisia, so Mediterranean is always where I feel my roots.
Gotcha. Makes perfect sense. So Frank, we always give the guest the chance to give the elevator pitch. What is Optimalex?
Well, Optimalex is a unique combination of legal expertise, data science, and computer science to mitigate the risk and increase consistency of damages estimate. And so we provide to P&C carriers insurance the ability, it's a software, of course, artificially intelligence based, the ability to predict the outcome of their cases, be it settlement or litigation, to manage efficiently their claims and reduce the cost associated to the management. At the same time, increase the consistency. We want this world to be a fair world and as much as possible settle when it is more efficient economically, which is most of the time the case. And increasing efficiency means also increasing fairness. And we can go into the detail if you're interested.
No, absolutely. So the first thing that came to mind is that if I had to guess, I am assuming that you have a lot of clients in Florida, given the gigantic mess.
So yes, Florida is a particular venue for the nuclear verdicts. We try to provide the objective information to anticipate those nuclear verdicts. As I said, we want to reduce the uncertainty on claims liabilities, hence reducing the accounting reservations, eventually also reducing the cash out to pay those claims out. But, you know, nuclear verdicts is probably less than 1% of the situations. Most of the cases are either regular verdicts or even more settlement. But even in settlements, there are many inefficiencies. It's more an arts job than a scientific job at the moment. Not that it is anything wrong with arts, but we want to put some more objective values, some more science to speed up the valuation process, to increase the consistency, as I said, and eventually save probably legal fees, proceeding fees, and achieve fair settlements.
And so I want to take a moment, like a parenthesis. So out of our listeners, the ones that are carrier leaders, especially claims and finance carrier leaders, are the ones that are potential clients for you, and for they immediately understand how important this is. But I would like to take a moment to make it clear to our younger listeners, right? My heart's always been very close to that side, to the new insurance professional. For the younger listeners, every claims adjuster sets their reserves, right? And they're a guesstimate, right? And with experience, you get better at your guesstimates. And the aggregate of all of those guesstimates of all those reserves become the amount of money that the company needs to have in reserves, right? And the more we need to have in reserves, the less we can invest. The more that we need to have in reserves, the more financial pressure we are under. Ultimately, the more that the claim costs long term, the more insurance costs for all of us, right? So I love the approach of consistent, right? Predictable, consistent, and fair, because it's a win-win-win, right? Like the insurance company wins by having lower claims at the end. Once everything's said and done, the person the claimant, being an insured or a claimant or a third-party claimant, gets paid fairly and hopefully faster, and society benefits also, because our insurance costs don't get more expensive unnecessarily, right? So I love the approach. So thank you for entertaining my little parenthesis. So how? Yeah, I'd like to hear some details on how it works. So if I am a carrier, head of claims, chief claims officer, or somewhere in the the top claims leaders at a carrier, how does this work?
Well, today, how does it work? Most of the time, insurance and the claims management have ownership of a huge amount of data from their own references, from their own insurance. So the best claim adjusters would refer to their own experience, which is good. They may share experience with their colleagues, which is even better. And if the insurance carrier is very well organized, they would have a central database, which is the best we can imagine.
Okay, so it's been a long time since I worked in claims. It's been about, I don't know, 8 years, 9 years or so. And I was really entry level. I did a year in the call center and did a year just in like PIP and MedPay claims. In my experience and what I've heard from claims adjusters to this day, that information is not organized in a way that is easy for the very, very busy adjuster who is under a mountain of, and they all are basically under a mountain of pending, to be able to easily find the information to make the best decision on both the settlement and the reserve.
Absolutely. So that's why I said kindly, if they are very well organized. We all know, and you know particularly well, that maybe this is a case in, I estimate, 15% of the carriers. So many are not perfectly well organized to use the data. They very, very much own the data, but they don't structure, curate, and basically put the data at the availability of their claim adjuster in such a way that they can decide upon it. But let's assume even if they can have this technology, which we provide. So this is one of the technology we provide, is the natural language processing techniques to curate your own data. It's a gold mine. But also we provide the data from external sources. Some of the data are public, litigated cases. They are all public data. Of course, they are completely unstructured. Most of the case are PDF, documents. And so we need to identify those variables in those documents which are predictive of the outcome. Probably 90% of the information is not worth using by the claim managers. So the second technology we have is, because we have the legal expertise, we know the good law and how the law takes those variables into account to consider the outcome. We have developed some technology to identify those variables, extract them automatically, and curate them. So these are external structured public data, but we have also access to private data. Most of the time they are semi-structured, but they are not available to everyone. So this is some kind of partnership we have developed with data provider. So as a summary, we help our clients to structure and use better their own data, but we also provide predictive algorithm based on external data. And by mixing external and internal, we improve the algorithm on a continuous basis. No private information is ever shared with other clients or prospects, of course, but everyone can benefit from the improved algorithm.
Okay. Okay. For now, are you okay? So based on LinkedIn, it looks like the company's been around for 2 years.
Yes.
So for now, are you very focused on a particular line of business, auto, or or are you able already to give us insights into any line of business within insurance?
So you're right. We are in business. We have started the company in 2020. We have launched our first insurance product in November 2021. That was in Denver at the ACE conference. I'm sorry, at the APCIA conference in Denver. And that was a motor vehicle accident product. You're right. So the first user interface we have, because this is a major market in the US, are auto. Then we have developed another user interface for slip, trip, and falls. The third one for medical malpractice, and the fourth one for workers' compensation. So all those user interface cover personal injuries. They can cover, of course, commercial lines. In motor vehicle accidents, we have also commercial lines. And we have some more projects for different situations, one on wrongful termination, the other one on contract termination, but those are different from the personal injuries.
Okay, so that makes a lot of sense. Yeah, so basically, each line of business is different, and you're rolling them out kind of like line of business by line of business, but you're rolling them out really quickly. So because you've already, like, in a year, less than a year, in like 7 months, 8 months, you've rolled out several. So that's fantastic. Okay.
That's true, Tony, but I have to be honest, the first user interface was developed in a long time before we launched it. And after, we have developed some, I would say, industrial way to duplicate our user interface and our algorithm. So we have improved with the experience. We have improved the life cycle. We have reduced the time to develop new products.
Okay. So you mentioned APCA. Oh, no. You mentioned
APCIA.
The APCIA.
Yeah. In Denver in November. We also, yeah, go ahead.
No, I was gonna ask. So I see on your website that you've got a certification by AICPA. So I thought it was the same organization. It's not. So
this is different.
So tell me about that certification. What does that mean?
So that's major certification for the insurance world. As you may know, insurance companies are very conservative, and of course they are right, about the confidentiality and the security of their data. So when we started to discuss with our major prospects, and that was, more than 1 year ago, many of them told us that we would not be vendor ready before being certified. The technical certification name is SOC 2 Type 2. And this is the highest level of data security and safety compliance. We have just got this certification a couple of weeks ago, which is a major milestone for us. Yeah.
Congratulations. Awesome. This is one of the things I love about insurance. Every day I learn something, regardless of how many conversations I've had with how many people doing cool stuff. Every day I learn something new. I did not know about that certification. That's pretty cool. Okay. I always like to ask if you have any specific client success stories. And I understand that you probably can't say the client name. That's fine. From our perspective, you can say the name, or you can not say the name. Up to you. But yeah, I always love asking about client success stories.
Right. So I can maybe mention two on different fields. One client we had, and that was on a different field. It was not on the insurance, on wrongful termination. It was a personal negotiation with someone who was unjustly fired, and there were a negotiation going on about the compensation of this termination. And so through the research of the good law and also data science, we could identify one particular legal angle, which was whistleblowing, which was very important to bring forward. And we worked with the lawyers in order to increase the bargaining power of our client, basically. And they settled 3 times more than what was proposed initially. And this was not in the insurance business, as I said. More recently, with insurance, one of the requests we had was to say, we are doing mock trials for those very uncertain cases, which are very expensive. We want to reduce uncertainty, and this is what our client told us with mock trials. One mock trial is around $100,000. So that is a very significant amount. I cannot reveal the name. Again, all of our clients are under a non-disclosure agreement, but I can tell you that we have developed this technology that can strongly mitigate the prices of mock trial. And if you want to make a numerical application, let's take, this is not a hypothetical, it's something very real, an insurance carrier with, let's say, 1 billion claim every year. If they are at a loss ratio of, let's say, 80%, 85%, which is nothing bad, nothing wrong, of course, let's say 85%. And if you imagine that we go with the prediction from 85 to, let's say, 83%, 2% to point of 1 billion is already 20 million saving. 20 million saving is much, much more than our license fee every year, is more than 10 and 20 times more. So we have very easily return on our investment. And I can tell you that in the future, with the experience of those SaaS agreements we are selling, we can very well progressively change business model. I think you wanted to ask me about the business model, and discuss any kind of, I would say, asset management fee, any, some bips, 25 basic points out of the claim management would be much more than the price of a license fee. So that could be also a future development of our business.
I do always ask about the pricing model. So is it by by the user? Is it by the size of my book of business? Is it by each time I ping your database? What is the pricing model? What does that look like?
The basic pricing model is SaaS subscription, yearly SaaS subscription. And the amount, of course, depends on the size of the asset, the number of users, you're right, the number of interface, an insurance carrier who is only on motor vehicle accident and the one who is taking different user interface would not have exactly the same price scheme. And yeah, so this is I would say, no-brainer SaaS model. As I said, after a couple of years with the same client, we will probably evolve to something more creative and more win-win, which would be a kind of profit sharing.
Oh, interesting. I don't remember any other Insurtech that's been here mention that idea. I like it. That's pretty cool. The more you align the incentives on both sides, make it a win-win. That's fantastic. Tell me about Agatha and Noah. How are they different? What are Agatha and Noah?
Agatha is our flagship product, and this is the SaaS product. So basically, when you subscribe to Agatha, you have the user interface, the data science, and the legal theory behind predicting any particular case. So reducing the uncertainty in litigation, trying to do as many settlements as possible instead of litigation at the closest to the fair price, right? So saving in the cost reduction, and consistency increase also. So this is Agatha. It's a pure product. However, Noah is a service instead. And when you said that many insurance carriers have a lot of data that they are not structuring well enough, this is what we do through Noah. It's a data curation, structuration, and basically to put the data they have to the standard of the prediction.
Okay. Thank you. I always like to ask a little bit about kind of your career prior to this. How, and especially, how did you realize that this was a need in the industry?
I have to admit that this was a result of a very bad professional failure. So that was about 15 years ago. I had a client. I was at that time specializing in corporate advisory, mergers and acquisition. I had a disaster contract with an investor for a client that turned bust. And of course, my client lost the money. They went bankrupt. I lost all the time to work on them. At that time, it was just money, but it was very painful to realize that the law was done so that compensation is relatively easy for costs that you can evidence in the past. You have invested, or you have a car crash, your car is, is completely a wreck, you are compensated easily. But anything which is in the future, anything which is difficult to quantify because you don't have a receipt to evidence this expense, this is really difficult. And so I realized I just needed to go back to school, well into my 40s. And I ended up with a PhD in law and economics, where I started to develop those algorithms, which eventually became Optimalex. So this is how I started. Otherwise, my main background is mergers and acquisition, finance, economics, in business over the last 25 years.
So real quick, so I was looking at your education, and I noticed the PhD. I was going to bring it up just now. So the PhD is listed as University of Paris, Pantheon, Sorbonne. Is that the very famous La Sorbonne?
This is it.
Oh,
This is it.
wow.
So
So you,
I started my PhD at La Sorbonne,
uh-huh,
and I completed it. So La Sorbonne in Paris, and I
uh-huh.
completed it in Columbia Law School in New York,
Okay.
where I am still actually a research scholar.
Oh, fantastic. How do you have time? So basically for the Americans in the audience, so you basically started your PhD at the Harvard of France, or
Right.
probably more accurately, we could say Harvard is La Sorbonne of the US. So I'm
You are too
guessing La
nice.
Sorbonne is older than Harvard.
Oh, that's true. That's true.
And then you finished it at Columbia University in New York. Okay, awesome. And I also see that you spent some time at Bain, the consulting firm, and
Yes.
now we're really going way back. But I am very curious. So according to your LinkedIn, you did at least some of your schooling prior to college in Tunisia. So I am
Yes.
curious. Were your parents in diplomats, or how did you end up in Tunisia?
No, I was born in Tunisia. I lived there for 17 years. My
Okay.
parents, grandparents, grandparents were born in Tunisia. We, from Jewish ascent and French culture, because Tunisia, as you know, was the colony of France a long time ago. And then I migrated to France to go to college, and then to other countries, and in 2015 to New York.
Okay, I got it. It's a really cool story. A really cool story.
No, I like the story. You're right that the diversity of my background, which was a challenge initially, is now something that I use as a strength, certainly.
So this is interesting. So before we start recording, we talked just a little bit about talking about the generational piece of diversity, and we'll talk about that. But since you mentioned it, I am curious. So you say your diverse background, very different from your average Frenchman, was a challenge at the beginning. Do you mean it was a challenge in France, or was it a challenge in the US once you got here?
It was a challenge everywhere for many reasons. When I arrived in France with a French name, saying that I was born in Tunisia, so an Arabic country, and being Jewish, people who were not familiar with the situation would
they
not
just have no
really
idea which.
understand. I
Yeah,
would say, what are you telling me? It's not very clear.
They don't know which box to place you in their heads. Absolutely.
I was not ticking any particular box, and I don't want to go into the detail, but I also was an activist in diversity for 20 years, and I was always a minority into any other kind of minority. So, but I like it now. I like it now. It's just part of who I am.
And the research on diversity now we know, right? Like we didn't have this research 20 years ago, but now the research in diversity is very clear that the diverse thought makes organizations better. And I'm not a psychologist, but I would guess that it's very similar just within ourselves. Having a diverse background helps you see life, business, and everything from more than one perspective, right? From the French perspective, from the Tunisian perspective, from the Jewish perspective, right? Rather than if my girlfriend's dad, who has lived in the same address in the same farm in rural Ohio his entire life, right? His way of seeing life is very different from you and me, who have moved around a whole bunch, or even his daughter, who has traveled a whole bunch. So yeah,
Right.
I absolutely get it.
And that brings, I think, a wealth for Optimalex. And I give you the concrete example. When I started at La Sorbonne, I met with, I was an atypical student, well into my 40s, as I said. I met with real students just into their end of college, basically, One of them is currently one of my partner, so co-founder of Optimalex, and he's French. When I started at Columbia, I met with another young guy who was doing his master in engineering, and he's now another of my partner, co-founder of Optimalex. And this guy is an Indian guy working in the US. And, you know, so we are now 4 co-founders, partner, about 12 people in the company. Among the 4 co-founders, 2 are into their 50s, 2 are well below 30. So, you know, the age of my children, basically.
So what that sounded to me like is the longer that you stay in school, like in your case, the longer that you've stayed in school, whether as a researcher or in your PhD or postdoc or whatever, the more that you've saved money on hiring me to recruit people for you, because you're meeting them in school. So I think it thus far has been a really good investment.
This is what you do also, right? Recruiting, if I understand well.
Correct.
Good
Yes, I specialize in recruiting for insurance and Insurtech talent.
No, but we will need your help because we want to recruit more.
Fantastic. So let's spend just a few minutes on the millennials issue, the younger generations, millennials and Gen Zers, when it comes to insurance. So as the audience knows, this topic is very close to my heart. I basically made my career on this topic. I wrote the book on it. I speak at many conferences on it. I love this topic. But I've only presented on this topic here in the US. And in fact, like one of my dreams is presenting this at Lloyd's. And by the way, if somebody has the hookup, I'll wear a suit and tie, I promise. I'll shave, but no, I won't cut my hair. I only tie it up. So I would love to present this at the Lloyd's Library. But my fear is that my view, even though I'm Costa Rican, that my view is very American, because I've built it entirely while working here, and like 95% while reading research done here. So I'm very curious on your thoughts when it comes to younger generations and insurance.
So it's a very interesting and mixed feeling I have. Maybe I can start with the positive side. In the US, the chance we have is that insurance is very, very diverse. I believe you have more than 4,000 insurance carriers, because it's mainly a state regulated business. And so you have potentially an unlimited space to take your career and evolve. Of course, there is a drawback to this, which is on average, you may have very large insurance companies, but on average, insurance companies are relatively small in the US. When you compare to Europe, where 10 insurance companies in Europe are probably gathering 80% of the business. If I say 10, I'm probably optimistic.
Okay, so
don't have.
So sorry for interrupting. That is fascinating. I never thought about that. I'm really not much familiar with the European insurance market. So basically, what you're saying is, here in the U.S., while we have State Farm, Nationwide, Liberty, and the other giants, Geico, Progressive, etc., we also have State Auto, Westfield Insurance, Erie Insurance. We have a lot of Amica. We have a lot of like regionals and super regionals, and even like county mutuals, right? Like they get really, really tiny, right?
Exactly.
So in Europe, it's basically AXA.
Well, you have AXA, you have Generali, you have Alliance, etc. So you have large, big giants. You have some mid-sized companies, but you don't have the equivalent of the state or local insurance companies, or sometimes, as you say, county insurance companies that you have in the US. So we have probably in Europe, they have actually, because I'm based in New York, but they have probably 10 times less insurance in numbers, maybe 400 instead of 4,000 or
Okay.
4,500 US. So this brings less diversity all in one for the young generation, but it brings also, I would say, a better sustainability. So you don't have the same situation that you just described at the beginning of this
You don't
podcast.
have half the Florida carriers going out of business at the same time.
The Florida insurance going bust, you don't have that in France or in Germany, certainly not, right? Mm-hmm. So it makes a big difference. I believe that there is another issue for the younger generation, and actually the issue is for the insurance industry, the image in general of the insurance industry, and this is true both in Europe and in the US, is relatively old-fashioned. The image, I say,
oh,
right?
Yeah. Oh my God.
So when you ask the millennial where you want to start your career, they would say tech. They may eventually say private equity, possibly finance, not even true today, but they would not certainly rate insurance number one.
Correct.
And I think this is actually a great opportunity for the future. First, because I remember very well that 20 and 30 years ago, when you would ask a young guy where they would like to go, they would say retailing, they would say marketing, they would even say auditing, you know, Coopers and Lybrand and all the big eight at that time. Today, no one would like to say that as a first priority. So who knows what will happen for maybe the tech or maybe the private equity, and who knows what will happen with insurance. I think, if anything, it can progress positively, and one way to change the image is to increase fairness. What I started to introduce, reducing cost and increasing fairness, is a very important challenge for the sustainability of the image of this business. And of course, importing technology may greatly increase fairness or help increase fairness in insurance, and hence the image with the millennials generation.
Okay. Yes, this is a very different discussion than the many other discussions I have about this topic. This is very interesting, and you're absolutely right. Our image can only go up. It really can't be any worse. I mean, yeah, it really can't be any worse. We're not number one. We're not number 50. We're like number 97 industry that kids think about working in. I think part of the problem is it's a multifaceted problem. A part of it is insurance is psychologically difficult product for the customer, right? If everything goes well, you get to the end of your policy and you get a renewal for 5% more money or whatever, right? Like, even though you didn't have an accident, even though you didn't have a loss, right? And 95% so 95% of customers get to the end of the policy and feel like they threw their money away, right? Because what they paid for was protection. And 5% of the customers have a claim, and hopefully most of them for life will remember the value of insurance. Maybe a few, the claim didn't go that well. So it's a psychologically difficult product, right? It's a very easy product for the media to hate on, and a very difficult product for the media to be positive about. The very rare time that we get mentioned for example in fiction, like in a movie, it's always a negative mention, right? Like some of those famously so negative. So yeah, who the heck would want to work in a business like this? And thinking of it that way, also, it's even for a kid coming out of college with a business degree, it's the only business that I have found where we don't know the cost of goods sold when we sell the product, right? We don't know how much your auto insurance is going to cost us to provide you. All we know is that if we insure 1 million francs, we have a good idea of in aggregate how much it'll cost us. So it's just what makes it fascinating also makes it difficult to get your head around, and also makes it hard for the public to understand this. So it's a real easy business to malign, right, for society. I don't know if that's better in Europe. In Europe, is there a better
No,
perception of it? It's the
it's very
same.
similar. It's
Okay.
very similar. In terms of reputation and image, it's very similar.
So I once ran into a young woman at CPCU annual meeting several years ago, and she said she was from Bermuda, and she said in Bermuda, the smartest kids grow up knowing that they want to work in insurance, and that blew me away.
Because of hurricane.
But that blew me away, and it gave me hope that we can make insurance a fantastic industry perception. I think the other piece, and I'm also curious if this happens in Europe also. Here in the States, at least at the big carriers, most insurance careers are great careers, but the entry-level job, especially in the last 15 years, the entry-level jobs are awful. Our call centers are tiny exclusive agencies where you don't even get benefits, you don't get health insurance, claims, and especially very low-level claims jobs where all you're handling is personal lines auto injuries on the phone. That's a very, very, very high stress, very difficult, low paid job. And unless we spend time teaching you about the rest of insurance and teaching you how to grow into the other great roles within insurance, you're just going to burn out and leave and never come back, right? Without even getting into like how life insurance is traditionally sold, where the life carriers would hire 100 kids right out of college, give them a phone book, and the survival rate would be like 4% after the first year, right? So I just went on a huge a huge monologue there, but I am curious if Europe is better when it comes to the entry-level jobs at those big companies that you talked about, or if they're basically giant call centers like here.
No, it's very similar. So the large insurance companies in the US and the large insurance companies in Europe behave exactly similarly. Maybe the only difference on what you mentioned are the benefit, because it is standard in Europe to have benefit. In continental Europe, we would not have any job without benefit.
Yeah.
So that would be only a difference. But again, this is an opportunity with the Insurtech, that is an opportunity to change the situation, to change the sex appeal, I would say, of this industry. And not only for the young guys, actually, it's also true for the elder generation. At Optimalex, we are also working with very experienced claim managers who may become experts with us and help us develop products or help us connect with large insurance companies with whom they have been working for years before. And they love it. They have fun. They learn a lot, of course, with the artificial intelligence technologies, and they are very, very useful. They help us a lot.
Yes, that makes perfect sense. And the shift in kind of the macro labor market for insurance talent here in the States, 5-6 years ago, 5 years, let's say 5 years ago, the Insurtechs for the most part only wanted tech talent. They didn't want insurance talent. They saw it maybe even as a liability. And especially post-COVID, the Insurtechs have swallowed a huge amount of tech talent. Now, not enough to like right, State Farm is not getting depopulated by people going to Insurtech, but they went from hiring very few people to hiring, I don't know, 10,000 people a year from traditional insurance, which compared to 2 million people in traditional insurance in the US, it's nothing, but it's like 500 times more than it was 3 or 4 years ago. So yes, for traditional insurance people that listen all the way to the end, there is work for you in Insurtech. Just find the right place. Frank, it has been a real pleasure. Sadly, I do have a meeting coming up here in a few minutes, so we're gonna have to kind of call it a day for today. But I honestly look forward to having you back to talk more about the progress at Optimalex as you guys continue rolling out new. What do you call the new filters, new views, new
user interface, new products,
user interfaces,
new clients, especially.
as you roll out new user interfaces and new clients. Thank you so much for your time. When this goes live, I will tag you on LinkedIn, and I will include I will also tag Optimalex and include the website for Optimalex. Thank you.
Thank you very much, Tony, and thank you for all what you do for the insurance industry and the passion you are infusing in this industry.
Thank you.